Why won't venture capitalists invest in me? Does that sound like you? Well, my next guest is the former CEO of MySpace before he took the venture capital industry by storm. Listen as we discuss what investing in Liquid Death, Dollar Shave Club, and more has done for him and how you too can copy those principles he's about to teach in this episode. All this and more coming right now. Let's get into it. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Mike Jones. Mike is the general partner of Science Inc., a $250 million venture fund and studio focused on building the next generation of companies shaping the future. He's achieved $1.3 billion in exits, including Dollar Shave Club, Liquid Death, PlayVS, Pray.com, Final Boss Hour, and more. Prior to Science Inc., he served as the youngest SVP at AOL, then went on to serve as the CEO of MySpace, overseeing global strategy. Mike's collective angel investments have sold for a combined value of over $6 billion. So what does this mean? Well, it means that Mike understands how to find, close, and exit winning startups for eye-popping returns. So Mike, welcome to the show, man.
Thanks for having me, Ryan.
So good to have you, brother. So let's jump right into it. You've been wildly successful. I mean, my jaw dropped when I saw all of those placements that you've done. Very impressive work, brother. And even before that, being the former CEO of MySpace, there's a lot that we can unpack here in such a short amount of time. So let's dive into it. You've done funds, you've run businesses, you've led leadership, strategy, you've done it all. What would you say to people just starting out on how to win and get some early points on the board?
Specifically at like venture capital investing or building companies, where we focus more on the VC side of it?
Yeah, sure.
Sure. So, I mean, I started companies when I was in college, right? And so I learned what it was to be an operator and have a payroll and build a staff and motivate people and fire people and all the dynamics of building and scaling and eventually selling companies. And after my second sale, I had enough liquidity and I happened to be in Los Angeles at the time. And I started meeting with startups because people would come to me saying, hey, how do I build and sell my company, right? And I had done it. So I began investing, right? And it was early days Los Angeles. There were very few venture funds, but there were some really good deals. So I'd say the first step for me was putting my own money to work. Like, what is it to be an entrepreneur? How do I tell whether or not they're going to be a phenomenal entrepreneur and drive good returns? Do I believe that they have a market strategy that's going to get to scale? Can I buy equity at the right price? Can I work with them over time to kind of encourage my outcome? And then obviously, hopefully I kind of realize gains. So I think the first step is like deploying your own capital. It can be small dollars. It could be $5,000 into a deal, but you do need some liquidity, right? You need some capital. And I think you got to put your own capital to work, because before you go and knock on other people's doors saying, hey, I'm going to invest your money and make returns, I think you got to show that you can do it yourself. And it requires you to put a little bit of risk. So I think the first step is find a way to generate some savings, find your way into the angel circles, meet those early stage entrepreneurs, determine where you want to focus and become a specialist, and then deploy some of your own dollars.
Brilliant. So yeah, absolutely getting that track record. And as we jokingly say, a real thing is when you put that in, that's results. And it really comes down to the three most valuable assets in your possession. I believe it's your reputation, your relationships, and your results. If you get all those firing in order, and I'd love to hear your opinion on that, but that's the results section, is to say, what have you personally done? If you're coming to me and I'm, say, some sovereign wealth fund or pension fund manager, you're asking me for $300 million, I need to know, are you okay with this? Have you done it? Or am I paying for your internship? They would prefer option A over option B. And so putting your own money on the line, absolutely brilliant. But how have you found reputation and possibly relationships to help you in building a venture fund? Have you found that helps?
Yeah, I mean, it's a big deal, right? So if you think about the mindset of an early stage entrepreneur, they're taking incredible risk. They're very vulnerable. They're pitching you their business. They're telling you their dream. They hope it's going to work. They don't really know if it's going to work. They may be personally in debt. Maybe they put their own capital into it. But at the end of the day, they're looking for guidance. They're looking for feedback, and they're preferably looking for capital, right? And so if your reputation is, hey, my door is open, I will spend time with people, I will give them knowledge, I will give them some of my learnings to hopefully help them on their journey and help them become more successful, then that builds a strong reputation. And what that means is when they go and meet other entrepreneurs, they might say, oh, I met this guy, Mike. He gave me some great advice. He maybe did, or maybe he didn't invest in my company, but it makes it so that my name becomes known, or in my case, my firm's name becomes known. And therefore more and more entrepreneurs come to us. So I give away my time quite freely. Now, granted, I also learn from those entrepreneurs. When someone says, hey, I'm doing something new in biotech, hey, I'm doing something new in legal, and I want you to hear about my AI legal approach. It's a two-sided street, right? On one hand, I'm like, yeah, I'd love for you to come and inform me of the magic strategy that you have from a legal perspective on how AI is going to transfer legal. That's going to make me smarter. And I feel like an obligation. In return, I will guide you in regards to the knowledge I have on how you might raise money, whether we're investing in you or other people might invest in you. I might even make some connections for you. right? So the more I can do that, the more I can give my time away, I also receive in that exchange, but then it builds up a strong reputation. And then more and more entrepreneurs come across my desk, Zoom meetings, in-person meetings where I learn, they learn, and then we find that next great deal. And that builds a strong reputation.
I love that. Now that, my friends, is a masterclass from the master himself. I love it. So, in venture capital, we hear a lot of stuff, and I'd love to hear your opinion on what kind of support can you advise as far as that investor-investee relationship when you invest in a company. What types of things can founders ask you, can expect from a venture capitalist? Maybe walk us through a little bit of that first experience of how, when those two come together, value is created in what way?
Sure. And so, one way to think about it is there's these different stages. So there's the beginning of you and I, Ryan and Mike, create the Ryan and Mike Fund, and we're going to disrupt. We'll just pick on AI legal because I think it's such a beautiful low-hanging fruit. We're going to go after AI legal.
Yeah, lawyers are nervous.
Lawyers, they should be. $2,400 an hour. Like, let's go and use some AI. Yeah. So let's assume you and I look at the market and we identify 4 or 5 areas. We think, there's opportunity in 5 areas. And part of that's looking at where venture funding is going. Has it already been funded? Are there a bunch of startups here? So suddenly you and I have a cluster of strategy. We're like, these are the areas we want to focus in on. We're interested. We start meeting with those CEOs, right? They're pitching us their stories, guys, girls. They have these pitch decks, their financials. You and I are going through them. We're hopefully giving them knowledge in exchange. We're learning through the process of evaluating. And then we pick one. This is our person. This is the person we're going to back. Maybe this is maybe 2 of them, right? We deploy some capital. Now we're at the beginning of the stage of the relationship where we're an investor, right? There's a formalness between us. And there's a little bit of a nuance, right? Because on one hand, that CEO wants to appear like they've got all their shit together when they meet with us, right? There's no problems. Everything's great. It's amazing. So on one hand, we have to make them feel very secure. Hey, we're in this journey with you. Like, we want to build this company with you. We're at the early stages, right? This is a startup. It's 1 or 2, 3 people trying something. So we need to develop that trust and rapport. Like, they have the capital, but we want to help them become successful. There's always going to be distance, right? Because on the other hand, we might also freak out and go, oh my God, you're not doing what you said you did. You're overspending. We're upset. So I build a lot of trust with my CEOs. I really want to understand the way they think. And I will really go off topic with them. Tell me about how you believe success is created. Like, tell me when we're trying to do something extraordinary in the world, tell me how you think extraordinary things happen. Do extraordinary things happen to you? Why do they happen? What do you believe in that lets you believe that you could do something extraordinary? Let's do something that's out of the bounds, right? So we're building this rapport. And part of that is tactical knowledge. Hey, when you hire somebody, let's think this way. When we're working on a budget, let's think about capital this way. When we think about partnerships, it's very tactical. On the other hand, I would argue there's a spiritual component. Let's think about how we think about success. Let's discuss how we think about belief. Let's discuss how we think about confidence. Let's start looking at both sides. And we're trying to build that up, the tactical component of the actual business, along with the psychological component of the management. So they're really in a position to receive that success and kind of build that thing with them. We're doing that over time. And as the company matures, the relationship becomes more formal, right? Suddenly it's a board meeting. Suddenly there's other board members. So there's other investors. We might not have that same intimate early stage relationship we had when we started the company together, right? So I focus on the early stage of let's understand the strategy, let's understand the tactics, the growth paths. Let's work on the psychology of the CEO. Let's understand how they think things happen. Let's get them in that right mindset. Let's not accept poor results. Let's find ways to kind of change the storyline. And for me, that's a multi-year process. I mean, I'm spending a lot of time with them. As the companies get more formal, I elevate to a board level. Maybe now it's strategy. Maybe now it's M&A. It's fundraising. It's senior executive hires. It's legal structures. Fine. We can go do that stuff too. And then the third stage is obviously, how are we exiting this investment? Are we selling it to other insiders? Are we selling it to new investors? Are we taking it public? We're doing a transaction with the company. Are we engaging bankers, right? So for me, it's 3 stages, right? Identifying strategy, looking at the market, selecting investments, developing the CEO, developing the business, and then finding our way to kind of return the capital back to our investors.
That is a power question, man. I absolutely love it. I think you said, how do our extraordinary things, how do they happen, or whatever that might be? I'm butchering it, but does that really help you to open up and explore their mindset and how they view success and achievement, which you're obviously expecting at this point? Is that one of the questions you would ask a founder of how do you make extraordinary things?
Yeah, I'll tell you a story about this because I find this really, really fascinating, right? So I believe in belief. So I believe in belief, and I believe that your belief will determine the outcome of your life. Not your religion, not the physics that surround you. I think it's fundamentally on your belief, right? And it's really important to me to understand who I'm investing in, what they believe. Because if they believe life's hard and we all gravitate towards the great middle, that's not going to be a person that's going to create an extraordinary result. Like, I need people that believe that they can do extraordinary things, and they can do them fast, they can do them capital efficient, and they become very wealthy in the process, right? I have to find people that have that belief, right? The other day, we have a really, really amazing company. I'm really excited about them. It's a very young CEO. And I said, hey, I want to meet you for coffee. Let's book an hour. He was sick. He still comes. He's like, I'm sick. I'm still coming. I'm not going to miss time with you. I'm like, wow. Like, I understand it. I respect it. Like, let's sit down and talk. And the first thing I'm asking him is, what extraordinary things have happened to you in your life? Like, tell me extraordinary things. He starts with, when I was born, I was paralyzed. And I'm like, oh, this kid's going to be awesome. And he tells me that his life journey of overcoming massive obstacles, honestly, through belief. And it happened to him over and over, a completely non-traditional path educationally, an incredible number of successes and failures, right? But there's no way this kid was on a normal path. He is volatility incarnate, right? He's not volatile, but his outcomes in his life are extremely volatile, not normal, like completely different. I love this kid. I literally fell in love with this coffee. I'm like, we're going to do, I'm like, when you're saying the word tens of millions, I want you to start saying hundreds of millions. I want you to start thinking billions. Like, now my goal is, oh, you believe extraordinary things can happen because they have happened to you. So you believe it. Now I want to up the bar. I want to set your dream bigger. Let's adjust your parameters, right? But it is hard to figure this out, Ryan, in the early stages with these entrepreneurs, is what is their belief structure? In fact, I've had people that we've invested in, which at the end of the day, I think they believe they probably are born to fail. They might not say it, and they self-sabotage, but they're kind of like, well, that's how it goes. Most startups fail. And you're like, yeah, sounds like you believe that your startup's going to fail then, right? And so it's really hard to figure this out because at early stages, you're not backing data, you're not backing traction, you're not backing customer feedback, you're backing belief. And so you really got to get to the core of what motivates people and what they believe.
Wow. Belief is the power behind it. I never thought of it that way, and I absolutely love it. I'm sold. That's it. I'm in. Yeah, no, understanding people's beliefs, that comes down to partners, entrepreneurs, anybody that you give money, and really just zooming out. Feel free to agree or disagree, but I see the fund management space as really a function of trust. That's why I tell most people, your first vehicle probably shouldn't be a fund. You could. They're quite expensive and infinitely more complex. But at the end of the day, I really think that understanding what you're getting yourself into, and if you're relatively unknown, we're speaking to emerging fund managers in this case, if you're relatively unknown and you aspire to that and you have solid belief that you're going to be a successful fund manager, that's obviously a form of entrepreneurship. Really just making sure that you generate trust. And that was one of the first things that we talked about, is really just generating trust. And then you start a fund and move people who trust you through that fund structure. So funds work, but funds are just a natural evolution of the trust that you've built through your reputation, your relationships, and your results. And over time, funds make sense. If you don't have that in place, you can still start. And that's what you're talking about. You're like, you got to start. You got to do a deal. Even if it's $5,000, you got to start and get a track record. And then eventually you can turn into an asset manager. That's the way I believe.
Yeah. The fund is just the technical vessel that holds the capital, right? Like, the magic component of this is that the fund manager or the investor has a unique perspective on the world, right? And they have this unique perspective. B, they have the ability to reach young and emerging talent that's basically aligning with that perspective, that wants to disrupt this world you believe in, right? And C, to your point, they build trust with those founders that allow them onto the cap table in some form. Advisory positions, small investments, large investments, syndicated investments, right? But it's got to start with a perspective. You got to be, as an investor, be like, the world's broken because of X, and a series of companies or founders are going to solve X. And then you got to say, I'm going to go find those series of founders. Maybe it's a network you're connected to. Maybe it's from your university. Maybe it's a research lab you're connected to. Maybe it's an industry you've worked in, right? But you have to say something's fundamentally broken. I have access to the people trying to fix it. And then the third question is just the economics. How am I getting involved in this? How am I going to profit off this? How am I going to support this effort? I can support it with time. I can support it with capital.
Wow. Absolutely brilliant. And, getting upside, obviously that keeps us here. I had an old friend who's a partner in an accounting firm, and he always would say, revenue hides all sins. And I don't know if that is not advice for those of you who are listening, but yeah, but it's not wrong either, but I'm not advising you on that. So upside, it does matter, but so does downside, or at least the belief of downside. We'll say some of it's real, some of it's true, some of it feels true. But either way, with all of your experience, man, and this goes far beyond investment funds, what are some cautionary tales as far as downside risk for emerging fund managers or anyone in this space? What would you say are some areas to look out for from your background?
Well, let's see. I mean, when you're investing into venture, you're investing into the most volatile asset class really out there, right? You're investing in a liquid private companies that have very undetermined outcomes, that are typically losing capital, that you're taking a minority position in, and you're having immense trust into the management and the potential, future exit of these businesses. So the first perspective from an investor is, make sure all your capital is not in venture, right? Like have traditional market assets, maybe you have some private equity, maybe you have some real estate, you could buy some bonds for protection. You have a nice diversified portfolio of which a component is venture. Fine. Ironically, a lot of venture capitalists like myself, the majority of our wealth is tied up in venture capital. So like we typically are over levered on risk, but that's fine. We live in trade in risk. Fine. In the venture space, if you are a fund, right, and you have deployed a ton of capital, what is very true today is the timeline between deploying dollars from a fund into a company to the time of exit is extremely long. Right. You hear these stories in the late 90s where people would be saying how they're still doing capital calls into a fund within a single year, but they were also receiving exits at the same time because the cycle of basically deploying capital and returning capital back is really, really short. It's very long now. Right. Which means that one thing to note that you will generally find is returning dollars back is really, really important. It is your primary job, right? Returning dollars back quicker is the best thing you can do as a venture capitalist. Even I would argue if you're taking some upside off the table. And I remember, on fund one, we received a large investment from a corporate. And I remember after the investment came in the first board meeting, and this might have been a month after we received the money, the board member sat down and said, "So how soon are you getting my money back?" And I'm like, "What do you mean we just received the money?" He's like, "Your job is to give me that base money back as fast as humanly possible." And I was like, "Oh, okay." I thought my job was to deploy. Nope, just give it back to me as fast as possible. I'll take the upside later. I'm like, "Oh." He was very forthright about it. Now, most investors do think that way. They just don't want to just say it because they don't want to take away your spirit as growing capital. So, one thing you think about downside is first is if you have a big winner, don't feel any shame of early selling your positions. You return dollars back to your investors earlier. Maybe don't sell it all. Maybe sell a portion. But that way your investors see those dollars come back quick, and then they're much more motivated to move on to fund two. A steady fund that's returning 2-3x fund, over multiple funds with really good cash management is often preferred than some fund that could be a 10x fund, but has really long gaps between its distributions. And a lot of LPs have told me this. They're like, "We want you to pitch us that you're a 5 to 10x fund, but we wouldn't be terribly upset if you were sub 5, but with regular capital distributions." So managing regular capital distributions is a big deal. And the way you can do is through secondaries. And today there happens to be a pretty healthy secondary market when you do have high profile companies and you can decide to sell those positions, right? The second piece is there's a lot you can do in venture around tax management that very few investors do. The QSBS exemption is a really, really special one. It can benefit investors really heavily. So you want to become aware of the tax impact to your LPs and make sure that you guys are optimized to tax. It is important for them. It needs to be important for you, right? The third piece is, venture is a concentrated game in that if you and I go out and we build a basket of 30, 40 companies, chances of all 30 being successful is basically zero. There will be 1, 2, 3, 4 that will hopefully be epic, and we want to own a lot of them. So in downside protection, I think you do not spread your capital equally in a portfolio distribution. You basically plant a bunch of seeds. And then in my strategy, you lever up really heavily on your winners and make sure you have large concentrated positions. It is a concentrated position game. You don't want to be right and wrong at the same time. You don't want to be right and you're saying, "I did 30 companies and 3 of them became billion-dollar exits," but that'd be wrong because the capital strategy and allocation you didn't provide strong returns off of the 3. Right? You can be right and wrong at the same time in venture. And so you can pick the winners, but not own enough. So again, downside protection, make sure that you reserve that capital effectively to really follow on those core winners so you drive strong returns.
Brilliant. And founder quality, we've really talked a lot about that. I know just me being a finance math nerd, naturally we can go to the numbers, but you bring a very good perspective and I can see why you're in the elite league of venture, but how do you vet founders? So this is a non-financial, maybe slightly subjective approach to making billions in venture capital. What have you found to be helpful or not helpful? Because this is a real downside risk with a lot of question marks. You want to move capital, but you don't want to take 5 years to get to know the guy. You got to move this thing forward. And so there is some potential downside risk. What have you found as far as vetting founders to be helpful?
Sure. Well, I can tell you big red flags for us, right? So in venture, our best founders are on a mission. This is their mission in life. And they have no secondary plan. They have no backup plan. There's no plan B. This is the plan, right? So they're not saying, "I'm running 3 or 4 things. One of them will work. Will you invest in one of them?" They're not doing that, right? They have no backup. They're typically not from wealthy families. They typically need this to work. They want this to work. Their dreams, their future dreams for their own life are kind of tied into this outcome. So they're on a mission, right? They also typically would do this instead, even if you didn't give them capital. They're like, "Look, I'm going to do this no matter what. Easy or hard. This is my mission in life. I have to solve this problem. I need to build this product." And so they're doing it for more than a return. And at the end of the day, that just makes them more compelling and more convicted to the story, right? The third piece is they typically have really good people that surround them. They need a co-founder. We often like this pairing of the visionary strategy CEO plus the chief operating officer, the chief financial officer. So you can have vision plus structure. And when you pair those things together, you end up with really good outcomes. So I would argue single founder is a big red flag for me when they're like, I can't find a partner. I don't think I need one. I'll just hire some people. I'm like, year 5, year 6 is going to feel really lonely for you and you may not make it through that time period. So they might feel that today, but what I know is the journey they're going on is a very, very lonely and difficult journey. They're going to want to quit a lot. If they don't have somebody by their side, they're having a really hard time getting through it. I would also say like no assholes, right? Like you got to be at a point where you're like, look, I often think to one of our companies sold and the founder made a tremendous amount of money. And I remember people saying, couldn't happen to a nicer person. Just couldn't happen to a nicer person. So happy for them. They were genuinely, and I've definitely had founders where somebody made a bunch of money. People are like, oh, that guy's such an asshole. I can't believe that guy made that money. I fucking hate the world because this happened. And so I think, I want people where like, not only their community supports them, their community wants them to be successful. And that also allows them to hire great people because they're like, this is a great person. I'm motivated and inspired by this person. I want to surround myself with this person. Even if they're difficult to work with from a managerial perspective, if they have a beautiful vision and they kind of spread that vision to people, they collect great talent. I mean, you're in a business of talent, right? These are not solo journeys, right? You need 5, 10, 15, 20, 500, 1,000 people potentially on some of these journeys. So you really want to get to a point where you have great founders that can attract great talent, which means they kind of have to be good people and they have to broadcast a beautiful vision. So those are some things that we think about. But you're right. You're evaluating founders at the early stages. I want them on a suicide run, single outcome. Like it's this or die. Like this is what we have to do. We're on a mission for it. They're a great person. They attract great people around them. They're surrounded by really strong co-founders to help them with the mission. They're not greedy over their equity. They're happy to compensate people the right way. Put together a team and see that this is a big team journey. This is 7, 10 years to big outcomes, right? Like you have to be signed up for something big. They got to really believe in it.
I love that. And do you find that you also hold that with yourself of surrounding yourself with good people, making sure the good vibe? I mean, I feel like I can confidently answer this already, but I would assume that not only a founder, but a funder like yourself would also drink that Kool-Aid, so to speak, and say, it's not only is it important for a founder that I invest in, it's important for me. I'm also a founder. I run a fund.
I mean, it's definitely important for me. You're right. Yeah. I mean, for me, it is really important. I think you find in venture, there's a lot of lone wolves, right? That have very unique, disruptive views on the world, and they may even have disruptive personalities. So you get a little bit more variability in there. At the end of the day, a VC firm can operate with one person, that can operate with 50 people. At the end of the day, if that person can attract good talent for all those good reasons, you don't necessarily have to be a teamwork oriented. It's a different team setup. It's a different team structure, and obviously a very different relationship with LPs than basically a company with investors. So it's a little bit different. But for me personally, everything I just said holds true. Right? Like I want to give my time freely. I want to be very generous with people. I want to attract people around me. If it becomes successful, I want people to celebrate it. I want to share in that success with the people around me. Very, very similar.
As the saying goes, like a moth to a flame, not a moth to a sledgehammer. So that's a good lesson from Mike to the rest of us, is to say, be that flame that lights up the room, that attracts people in. You've got that good energy, but that's not a tactic. That's just how you live your life. And if this is helpful, I reached a point in my career where things start to really go well. And it's amazing how many friends you have when things start going well. And so I reached a point in my career where I felt like swinging a dull axe. You know what I mean? You're like, I don't know what's going on. I'm just not quite cutting through like I used to. And so I, like any recovering CFO that I am, there's medication. It's a real illness, but in all seriousness, one of the things I did is I need to do an audit, and I believe in energy and belief in all of that as well. And in pondering that, for those of you who can hear my voice, if this is helpful, the 3 areas that I put an energy audit, I called it umpires, vampires, and empires. And so umpires are those people and habits that keep you on the straight and narrow. And that's not just business. Maybe you think about doing something that could obliterate your family, and it could be anything, and you need those people around. That includes lawyers, doctors, habits, everybody that keeps you on the straight path. Then there's energy vampires. I don't have to go into that. By this point, if you're listening to the show, you've probably experienced 1 or 2 of them. But those can also be bad habits, anything that drains the energy and the joy and the light. And then empires, be around people that are quite similar, not exclusively. We're not talking echo chambers, but people that you don't have to explain yourself. Those are nice. And as you improve your position in life, sometimes you get into that lone wolf status. And so really just managing that energy, not only seeing how others that you invest into it, but also managing your own energy and calling an audit to say, are there habits or things or thoughts that are draining me down? Am I doing it to myself? Are there people around me that maybe I need to create a little distance? do I have enough people that are rooting for me who are not empire builders, but they're umpires? They're just like, I just want to see you win because I like to see good people and I think you're a good person. Whatever that is, make sure that you're managing your energy, and you're also investing in people that bring that energy, like the do it or die, right? This is as you said, a suicide run, and really finding, investing, and surrounding yourself with people that build your energy, you build theirs, and once you have it, I'm sure, Mike, you've had it. I know I certainly have. It's like you feel like there's nothing going to stop you when you got a team that energized. Would you agree?
Yeah. No, I like that. It brings up like a few things for me. One is I always like the statement that you're the average of your friends, right? So if you surround yourself with degenerates, you'll lower yourself to their status. If you surround yourself
been there. Yeah, high school days.
Exactly. 100%. Right. So I think that is absolutely true. If you're surrounding yourself with people trying to do exceptional things, and they're going to hold you accountable to do exceptional things. I also say something that wasn't obvious to me though was I often surrounded myself with great CEOs that were building great things, or in my case now, venture investors that are doing great deals. Sometimes I find that I think that they are my supportive group, but when I leave their presence, I feel like I've been with energy vampires. I realized I walked in the room feeling like I was like so proud of my work and really comfortable with my portfolio. And I walked out of the room feeling like I missed every great deal and complete FOMO. And oh my Lord, how am I so unsuccessful compared to this room of people? And so sometimes I found that the people that I thought I should be hanging out with were actually not lifting me up. They were making me feel very drained. And part of me, likes to not surround myself with my peers because, if I'm building 3 or 4 new companies with great CEOs, I'm falling in love with ideas and I'm growing them. I feel like they're great. But then the moment I'm with other builders, sometimes I'm like, oh my God, their idea is so much better. They're more focused. It distracts me, very similar to social, right? Where you're like, oh, I think my life's so great. And then something on Instagram, you're like, oh, isn't my life great at all? My life looks terrible. This is, and so that comparison mentality, I don't know how you frame it. It's like maybe they were empire builders, but really they're energy vampires, or I don't know, but there's some disconnect in there that for me held quite true.
Yeah, I love that. Yeah, I know Instagram, it can make anyone feel horrible for only having 2 Lamborghinis instead of 3.
Right.
I know. Right. It's a tough life on Instagram, yes. But those of you who are on it, Chip, stay strong. Yeah, in your 3rd Lambo, I guess. So, but I'm totally doing it. But and I think what you talk about, this does not get talked about enough, Mike. And thank you for being vulnerable and keeping it real. When I started, I went the school route, and they pump you full of formulas and spreadsheets and calculus and statistics and all kinds of goodies, and they're cool. But what doesn't get emphasized enough is the soft skills, is the self-awareness that does need to exist. And perhaps those well-intended professors just hope that you figure that out, and some of us do, some of us don't. But I think and especially in this place of exploring your downside risk, is not only investing in those people who have those soft skills, that self-awareness to bring the right energy, not only to you as the investor, but to the rest of their company, but you're doing that as well. And could you imagine having a company and portcos and CEOs around you where we're all focused on not being vampires? Maybe some of us are umpires for others. Some of us are empire builders for others. But either way, we're not just focused on the numbers, and obviously we are. But we're also focused, we're checking in with ourselves and those around us to be like, how you doing, man? Your performance matters. I want to see you win as much as you want to see me win. I've been on those teams. What a wonderful time. So I absolutely love that. We could talk about that and have a whole show on that, but we got other stuff to counter. So I'm dying to know. Let's shift gears. I'm dying to know. Talking about the market, I'm just curious. I mean, we all pay attention to the market, different corners of it, but as far as what's going on today, what are you guys seeing? What excites you? What terrifies you? What's the current state of things you're seeing out there as a venture fund?
I mean, we've always seen a ton of volume, right? So we always reading pitches. I would say I don't get as many token launch pitches as I got maybe a few years ago with the kind of all the changing nature of crypto, Web3 world. I think there were kind of 3 points in my life where like my lens changed. Like the first was I was working at my University of Oregon's computing center, selling Apple computers to kids. And I remember when the web came out and we like installed Mosaic and we're playing with this web. And I remember my eyes being like, oh my God, the world's just changed, The second was I remember when I was spending time with all the crypto people and I bought my first Bitcoin on Mt. Gox and I was like, oh my God, the world's changed again, right? And the third piece is AI. We're 100, like everything felt boring until, today, right? So now it's like, it's funny. A few weeks ago, I was thinking about the impact of AI in legal, as I mentioned a few times earlier. And I came up with this concept. I won't go through the concept, but I contacted kind of a partner of mine in India that runs a big dev firm that we have an investment with. And I said, hey, I've got this idea. And they sent me this link back in probably like a week that was using AI to explore this idea legally. And I said, oh, where'd you find this service? They're like, oh, no, that's yours. We built that for you. I'm like, but it's only been like a week and I didn't even send you a spec. They're like, yeah, they're like AI. So I'm like, wait, I have basically a near consumer ready piece of software in a week and a few $1,000s of dev time that does exactly what I'm talking about because it's parked on top of an AI engine. They're like, exactly. What do you want to do next? Now, for me, it sets my mind on fire, right? I look everywhere now and I'm like, how can I bring AI to change this industry, change the status quo? So today that's now, I would say very similar in crypto. It's funny, like when the token economic came out, everyone could rip their own token. I got mostly terrible pitches, terrible ideas, like unbelievably terrible ideas. I'm sitting there thinking about title companies and escrow accounts, and people are pitching me NFTs for, whatever, fractional ownership of a Lamborghini or something. And I'm just like, so it felt to me like the the entrepreneurship intuition over the technology wasn't matched with the industry size that could be disrupted with traditional technology. Right. And I think that's the true with AI right now. Like I'm seeing these bespoke little clever things to AI, but I'm thinking through bigger things. I'm like, well, gosh, AI can be applied to this thing. And this is a multi-trillion-dollar massive company idea. So I want to see more of those pitches. I'm not seeing as much as I'd like. And typically what that means is I start building this stuff myself and then I find founders. I'm like, hey, you're doing this, but like, look at my strategy, 30% off what you're doing. And I've already built it. Are you interested? And they're like, oh my God, I want to run. I'm like, great, let's fund you to do that. Let's go. So for right now, that's kind of where my mind is at is, yes, I see a ton of CPG stuff because the nature of Liquid Death, Urban Remedy, Dollar Shave Club, we get a bunch of CPG and I love CPG. I love functional ingredients. I'm excited about the protein revolution happening. We're investing and we're going to get great returns off some of those deals. But there's stuff over here that I'm playing with where I'm like, oh, this is really cheap. It's potentially really fast. It goes after a major industry. I actually want more of these pitches. Like I'm happy to look at your next generation beverage and how you're going to disrupt Red Bull and like the next candy company. Great. My team's excellent. I'm excellent that we can spot winners. Great. But I really want to see this. I want to see simple use AI tools going after multi-billion-dollar legacy businesses.
Let's say in the short run for 2025 versus 2026 and beyond, does that change or is it one straight line? You see one thing that's going to rule it all or how are you guys perceiving kind of the mid to short term?
I've been given like a 2-year window. I would say from a market perspective, we think public markets open up. We think consumer IPOs are there. I think that we'll get rewarded with the good transactions. I think the interest rate will fall because I think they're going to force the interest rate to fall. I think there will be some major spending savings from the government. I'm not sure of what wasteland is left for certain departments inside the U.S. government, but I think they will probably save a bunch of money. I think there'll be good economics on the end of it. There may be some human cost. There might be some human capital costs, right? And we're paying some human capital costs now. But what that sets me up for is lower interest rates, good growth environment, positive environment for M&A. We're seeing M&A start now, and then positive environment for IPOs. That all makes it really, really happy for me, right? I think the second piece, though, is that startups utilizing AI could have the fastest revenue growth than we've ever seen, super fast deployed code, concept to prototype to consumer ready version within weeks to months, super low cost to launch businesses. And it's all going to be about creativity. Like, where are you pointing those weapons and what are you spending your time on? And then I think they go after legacy businesses, and I think the legacy businesses have to acquire them. So I think there'll be a purchasing spree. Maybe that purchasing spree is 3 or 4 years out. Maybe we have 1 or 2 years of really good building and 3 or 4 year 3 or 4 of M&A. But I think it has to come because I see it already. It's like I can see you and I could probably go quickly through a list of 25 industries that like core components are going to be destroyed through AI, right? That's going to be amazing. The only question is which 18 to 24-year-old engineering team is going to rip that industry open and have the intelligence to position it against that kind of legacy competitor. So I think it's an exciting time to be in venture. I want to make a ton of small bets. And then on the winners, I want to dump as much capital as they need to get to scale. And I want to sell those companies. I think it's going to be big.
Brilliant. And so now let's look way down the road. Future forecasting, look into our proverbial crystal ball. And in all seriousness, people hire us to somewhat try to look around corners and really pay attention to this and see where the smart money is going. What sector, you don't have to say what company, we won't steal too much secret sauce here, but what sectors are you finding that's going to be looking very promising as far as AI or anywhere really in the long run?
I think legal and medical are going to be unbelievable. Huge amounts of complicated data and rule sets ingested into a giant centralized brain where you can ask questions. Insurance, finance, banking, for sure. Incredible. I think entertainment, content creation, books, writing scripts, like 100%. Like, I think it just makes better content and it gets more interesting. I think there's a layer of software that we build that sits on top of everything. Like, one thing I think a lot about is how, when right now you and I build a website, we build an app, we build one for everybody. We build one version of a website and every single person uses the website. I recently built out a tool where you connect up your Google account and we create an automated profile of you that can be passed on to the website. So the website itself can be customized to you. The app can be customized to you, which means that we're building single use software. That software destroys itself after you use it. So when you go to the website creates itself for you. And when you leave the website no longer exists, right? So that concept where basically it's a one-time use software exchange off of an AI engine that's auto-profiling you based on whatever data you want to give it, permissions to read. That's a different way of thinking of software. You and I don't have to A/B test a single funnel that basically is working for the majority of users. We can create a system now that's bespoke for every single person. Like, think to yourself how weird it is today and age that you go to like the Lululemon website and you have to select men's. You're telling me with the amount of data they have, the amount of IP addresses squashed around, your email address, your cookies, they don't know you're a guy? Like, how is that even possible? You know what I mean? So it's going to change the way. So yes, there's big industries. There's legal, there's medical, there's pharma, there's drug interactions, prescriptions, medicine, finance, content. Yes. But then there's also just the way we're going to interact with software. What happens to A/B testing? What about user interfaces? Can they change per person? Can we think of a different way of building software and lay that on top of everything? So there are lots of areas to play right now.
Wow. Brilliant. All I want to know is, man, how hard can it be to build a funnel? Can I just get an AI to do all the copy and the funnel?
Yes.
And that's what you're saying is you're like, it's not a funnel. It's a funnel per person and tailored to preferences and things you like.
Your funnel.
Mm-hmm. Yeah. So admittedly, it's going to show me a lot of theme park roller coaster videos. That's my
Sounds
guilty
great.
YouTube thing.
As it should. Yeah, I totally, that sounds perfect.
Yeah. And so it's living on the edge, man. It gets pretty wild. So I absolutely love that, man. And so as we round third base, I'm just curious, with all of your experience, both in finance and corporate development and everything that you've done, wondering if you could leave behind, 1, 2, maybe 3 different competitive advantages that will give our listeners an unfair edge. What would you say?
Well, the first is I approach life that I can learn something from everybody, right? And I'm just looking for secrets. So I want to find a secret from everybody. I want to learn what makes them special, what makes them tick, what specific knowledge they have that form them, what specific strategy they know that no one else knows, right? So I'm looking to learn. I'm curious. I want to meet people. And the best way for me to do that is to get out of my house, get out of my office, get out there in the world and just meet people and learn, right? That's the first piece of it, is like, just be curious. Don't be learning. Assume you know nothing, right? Just go out there to learn. Like, I don't want to be the smartest person in the room. I want to be surrounded by the smartest people in the room, right? Like, I don't need to be the smartest. I just need to be the most curious. So that's a big piece to me. The second is like, karma's real and friendliness carries. So like in my mind, like every single person you interact could be a great future employee, future investment, future partner. And I don't want to leave anyone dissatisfied. So being in that open mindset of like meeting a ton of people and just making sure that you're giving and giving and giving, I think that makes for really good partnerships and builds like a beautiful long-term strategy. It just lays really good groundwork, and those people will be there to support you. So that's a big piece for me. The third is like, I think you got to become specialists. So yeah, I'm interested in lots of things, but when I get into something, I want to go really, really deep. I want to know it extremely well. And I want to immediately go to the smartest people, and I want to hear from the smartest people. I don't want to hear from speculators. I want to hear from knowledge receptacles. I want to know people that know knowledge, and I want them to provide that to me. So that's a big piece of it too for me, is surround myself with experts on wherever I want to go to the top. It's amazing how easy it is to get people to talk to you. So like, if you're like, I'm going to become a specialist there, don't hear anecdotal information from third-party sources. Get to the core, go and learn it, become a specialist in it. And if it's big enough for you, big enough for your market, big enough for investors, then go and deploy there. Like, bring your conviction, build a thesis, go deep in your conviction, but become an expert in that specific piece by surrounding yourself with the smartest people.
I'll paraphrase the late great Steve Jobs, but I believe he was known for a lot of quotes and everything. But one of them is, this goes to your expert comment, is simplicity is the highest form of sophistication. This is how I know I'm talking to an expert, is because they make complex things simple.
I totally agree. Totally agree.
And the opposite is true, by the way, folks. How you know you're not talking to an expert, no matter what words they're telling you. They take simple things and make them highly complex, and you come out of there drained, right? So back to what we're talking, you see how all of this is connected. And so you come out of there drained and be like, what? I don't even know what to say right now. And so really just making sure you're around people who are quite sophisticated and elegant in the way that they communicate, the way that they teach, the way that they build companies, is they're saying, I can make it so good. I'll make this real simple for you. Let's get rid of all the noise. Let's get right to the signal. And this is how you do it. So
I love that. And you're exactly right. I love people that can take complex thought and put into simple words. Yeah. And I respect it so deeply. Like, it's honestly one of my favorite things.
It's so
and
good.
You're exactly right. It's such a good symbol of intelligence.
Yep. And so now when you're around people, so now I guess we're totally judging people. No, I'm kidding. We're not judging people. But what we're saying is there's just from our experience, and yours is vast, is we say, look, we've been around a lot of people. Some we've led, some led us, some we've invested in, some invested in us. But all things considered, we talk about what energy is like, or right, a moth to a flame, not a moth to a sledgehammer. One of those attracts people, one of them repels them. And then also these people who add to energy, they simplify complex things. They really are a specialist, and they're great to work with, man. I can't talk about that enough. So as we round third base, is there any final remarks, anything at all before we wrap things up, ways people can get in touch with you, anything at all?
The one thing I would note is, like, if you decide that you're going to focus on becoming a venture capitalist, I really, really recommend you go to startups first. People come to me all the time, but like, I want to start a city, I want to start a bunch of companies, or I want to invest in a bunch of companies. And I'm like, how many companies have you started? How many companies have you worked at? Oh, none. Right out of college. I'm like, because there's a very specific amount of stress that goes with when you build a business and you have staff, and the staff has employees, and you don't know about your funding and your fundraising, and you're worried about making payroll. There's a reality to it. There's a grit to it. And I would argue that if you haven't gone through it, I think it's really hard to relate to the entrepreneur. Like, you can be really right about the theory and you can be great about the market, but when it comes to sitting eye to eye with an entrepreneur and convincing them to take your money over someone else's, there's a relatableness that I think needs to be there. And so it's different if you're like, I'm going into late stage. Fine. Late stage, you got a lot of data. You're looking at market comps, you're looking at valuation exercises and figure out, that's fine. Different. If you're going to touch early stage, Series A, Series Seed, Series A, startup investments, go work at a startup. It doesn't have to succeed. It's almost better if it fails. Get as close to the board as you can, get as close to investors, spend time with management, understand what those stresses are to build a business. It makes you a really valuable asset to the startup founder, right? Because then you can help them beyond capital. You can really give them good advice. You can spend time with them. And I get worried when I see people right out of college starting venture funds because they come from whatever, a connected family or whatever. And suddenly they're like, I'm deploying. I'm like, but if you haven't done it, it's fine. You can ride my coattails. You can go after my deals and let me lead, and you can come. It's the whole course. I love it, but go get experience tactically running companies. You'll really understand the start better, or choose a different phase of the lifestyle cycle. Go to Series B, C, D. Fine, like different analysis. So I think you got to get in it. You got to experience it, before you can go and fund it.
Wow. Absolutely brilliant. Spoken by the true master specialist himself, man. I absolutely love it. So just to summarize everything that Mike and I spoke about, just be curious, meet people, get out of your house, get out of your office, really just be toe to toe, belly to belly, start building those relationships, and you're going to learn a lot. The other one, karma is real. Kindness carries. Just be a giver more than the taker. Watch what generosity can do for your life. Whether you're an investor or not, being a giver and showing generosity, not only does it help your career, but it makes people see the best possible light. Who doesn't want to work with a generous person? I don't know anybody. I love working with generous people. It makes me more generous. And these are those empire builders, those umpires that just say, hey, we're not going to let you act like an idiot. You're going to do the right thing, whether I have to drag you over that or not, but you're surrounded by the right people. And then finally, become a specialist to become successful. You do these things and you too will be well on your way in your pursuit of making billions.